foreclosures on my own. There have been times where you get a property as an assignment, and you're talking with the occupant and offering relocation assistance, whether it's a homeowner or a tenant, and then we find out that the property gets rescinded, and the occupant then gets to get modified again, or one more time tries to work it out and reverse the foreclosure. So just adding that to June's comment. Go ahead, Bonnie.
Okay, just throw some numbers at you to address this shadow inventory, and I agree with everything June said. The average number of days for Chase, these are Chase numbers, that a homeowner is delinquent prior to us taking it to foreclosure is 445 days. In California, a little worse, 465 days. So that's how long it's taking us to take a property to foreclosure. And during that time, we are reaching out to that homeowner on an average of 111 times. And in that 111 times, that includes attending events like the Hope Now events, where we're doing face-to-face interviews with the homeowner. We're sending letters, we're doing door knockers, we're encouraging them to come into our homeownership centers, which, by the way, we have 18 of those here in California, where the homeowner can actually go in and have a face-to-face with customer assistance specialists to discuss their situation, including short sales. So, it's so funny because I can remember doing a lot of these presentations 2 or 3 years ago, and the emphasis was, you're moving too fast to do foreclosures, you're just wanting to take these people's homes. Now the conversation has totally changed, and we're getting pressure from congressional offices and other entities to speed up the foreclosure process. It's taking too long. You probably would agree with that because there's your shadow inventory. It's us trying to help that homeowner stay in the home, which is our first obligation in our role as a servicer. So, we're kind of caught between a rock and a hard spot. We have to help the homeowner. We recognize you. We want to do business with you. And our position is that where your income potential is for the next couple of years is in the short sale market as opposed to the REO market. But we do have an obligation to the homeowner to try to help them stay in the home first, and sometimes that takes quite a while for us to move forward with the foreclosure process. So, I agree. I don't think there's really any shadow inventory, but there's definitely a time lapse in us getting that property through the foreclosure process and the homeowner deciding if they want to do short sale. And keep in mind, it is the homeowner's decision to do a short sale. They have to decide they want to do it.
The next question is Wells Fargo, Chase, and Bank of America going to have any new programs to speed up the approval process for 2012? And I'll let you speak.
So yes, and yes. Bank of America is very, very focused on making changes to improve our process. We're very proud of the fact that we were the first servicer to begin using the Equator system to help streamline the process and provide an area for anyone involved in the transaction to document what's happening on the file. So for 2012, how many of you are already registered in Equator? By show of hands. So a great many of you should have already been receiving, very recently, within the last couple of weeks, updates through Equator that are giving you information about the changes that are occurring. So Equator was very linear, very task-driven. What we did is looked at that process to see what tasks can we combine that we can take care of at the same time to help reduce the decision timeline in getting an approval letter out to you. So
all of us want to know, is there a short sale preferred agent list? And if so, how do you get on it, and what qualifications do you need?
You don't really want to know that, do you? We are working on that. I'm pleased to say we are going to be rolling it out probably by the end of this summer. We are going through our priority partner agents first, so another reason for you to establish a relationship with a loan officer. And it will be, what we have to do for privacy issues, it'll be, you'll get leads from us, but the homeowner will also get multiple names of realtors from us, and then they make the choice. one specific real estate agent. But we are working on that and starting. I've already started rolling it out and working actually in California. So stay tuned for that. But again, it'll be operated first through our priority partners.
You know, during the hard times, you know, your credit's so good that you can pretty much get free cash. And at the time I was getting 0% cash advances from banks. So the times that I was not closing a real estate transaction, I was borrowing from the bank to make my mortgage payment. Well, that soon ended, and a couple of years later I was about a couple $100,000 in debt on credit cards, in addition to my mortgage being upside down. And we had to, unfortunately, file bankruptcy. We also did a short sale on our property. But I remember the days where me and my wife would sit at the table and cry, and, hey, do we keep this house, do we let it go? You know, we're trying to do everything we can do to make ends meet. And at the end of the day, when we did sell the property, it was just like that load and that burden came off our shoulders. And now when I'm able to speak to homeowners, I'm able to speak with experience. I'm able to speak with you know, more of authority and say, hey, these are your options, and I understand what you're going through. So again, I just want to commend you guys for being here and taking the time to hear what the panelists have to say and make a difference in today's market. So let's just give a hand clap to you guys, okay? At this time, I would also like to thank the Broker Member Relations Committee for making this event possible. I'd like to recognize Kathy Julius, our committee chair, and the rest of our committee members. If you guys could all stand, please. Let's just thank them for putting this event on. So please be respectful to all of our affiliates. If we could turn off our cell phones. If a cell phone does go off, Gloria.
But what I would like you to consider is that since the market started changing in late 2007, early 2008, we are now seeing kind of a second wave of modifications that are coming through. We have a lot of government programs as well. We are looking at homeowners. Our first goal is to look at every homeowner that is in a default situation and suffering a financial hardship, is to look at their situation and determine, is there something that we can do to modify the terms of the loan and allow them to retain the property. But really, the truth is, not everyone will qualify for a modification. So I said we're seeing a second wave. Some of those homeowners that did receive a permanent modification early on in 2008 into 2009 are now going into default again for whatever reason. They've lost their job. They've got, you know, something else is occurring in their life that's causing them to be in default. So this is something that is going to be ongoing. We will continue. Our first goal is to assist every single homeowner to retain their property if it is all possible. And then secondarily, if it is not possible, to offer them a dignified solution in the form of a short sale or a deed in lieu to allow them to move forward successfully.
So if I take a look at our modification numbers for Santa Clara County, really I'm happy to report that this area, I'm sure you know it, may not feel it, is doing better than any area in the state. The only rival closest to you at this point is perhaps San Francisco and how our loans are performing, so that's encouraging news. Another trend that I find encouraging is that our new delinquencies across the state, people that are just going late, are starting to decline. So I take that as a real positive. In California, about 94% of our customers are current, so the vast majority are current. If I look at Santa Clara County, actually 96% of our customers in Santa Clara County are current.